Hi everyone, this is Jason Burak of Wall Street for Main Street, and this is your video blog for Monday, August 16th, 2010. In today's news, the Japanese ruling party announced that the Japanese yen is rising too quickly against other currencies and it's hurting their exports. So Japan will be going into the foreign exchange market to manipulate their currency downward. The race to debase continues, and that means that Japan is going to effectively be shorting their own currency. This means more people will be jumping on the Japanese yen carry trade back again as the hedge funds go hot potato to hot potato to hot potato from the euro to the US dollar to the Japanese yen and to the UK pound. Looks like the main currency that's going to be shorted right now is going to be the Japanese yen, as it's been rising too quickly against the US dollar. Also, based on foreign currency controls, what this means is the Japanese yen, like I said, is also shorting their currency, but the way they do this is by going and buying more US Treasuries. So they're basically going to go long the dollar and short their own currency. This helps out larger Japanese corporations who have a very good export business. This does not help, and this also helps out the Japanese government, which is running humongous deficit spending. This does not help out savers in Japan, who are buying the Japanese government debt at low interest rates. This obviously does not help them out. A weak currency is only good up to a certain extent and only good for certain things. It does not promote saving and investing, unless you're investing abroad. In other news today, it appears BP has also been misleading us again, and it looks like their well is not going to be capped by the end of this month. They're saying September now, by the end of September, but my guess is Matt Simmons was right about this, and they're going to keep pushing it back and pushing it back and pushing it back and pushing it back. So I don't think they have the main well capped. They might or they might not, but there's also other wells. Also today, China, it was announced that the U.S. Treasury reported that China did not buy as much Treasury debt, and China has actually been selling U.S. Treasury debt. In the month of June, China sold about $24 billion worth of its U.S. Treasury holdings. So that I guess China is diversifying into other foreign currencies and other government bonds, or they're going and buying commodities and doing some of those deals with CDE and some of those Coeur d'Alene and some of those other companies. To talk about foreign currency, I wanted to talk a little bit about foreign currency more. First of all, your foreign currency, the money in your wallet, that is paper fiat currency. So it's really not backed by anything except by decree. Fiat is Latin for by decree or by order. So it's money. The stuff in your wallet is money because the government says it's money. It's not backed by gold or by silver or by copper or real estate or anything else. It's money because the government says it's money. That makes it a currency, not really money, if you know what I'm saying, because there's a whole bunch of different definitions of money, but one of the main definitions that includes money is a store of value. So currency does not store value. Currency is just basically a medium of exchange and does some of the other stuff money does, but it's not real money. Okay? One of the ways that Japan will be able to weaken the yen is by propping up the US dollar. So what this means is the U.S. Treasury market, which is a big bubble in and of itself, where the U.S. is able to continually borrow as much as it wants at humongously low interest rates, this bubble continues to expand. So this thing is just getting humongously bigger. It almost popped in 2008. People were going to thought, but then people went back into the dollar as the safe haven. So right now it looks like that bubble is going to continue to expand. I don't want to hold any U.S. Treasuries. I don't own a single dollar's worth of U.S. Treasuries. I don't think they're a good investment. You're not getting the type of return for the risk that you are taking. Talk to some professional bond traders, not necessarily some salesmen who only sell bonds, but some people who actually have some experience, like actually making money trading bonds or investing in bonds, and they will tell you that they've been paring back their bond exposure, or one bond trader in particular that I've spoken to is completely out of bonds. So that's basically how the what's going on right now. A lot of people, a lot of foreign governments are going in there and trying to focus on continuing to prop up the dollar to keep their currency weak, and that helps with exports for their larger corporations. So they can make a lot of profits outside of that country in stronger currency and then convert it back to weaker currency. And this makes their earnings look larger than they really are due to foreign currency exchange, whereas they're not necessarily growing the company as they should with productivity and revenue gains, and a lot of the earnings are kind of fake due to the foreign currency exchange. So that is something to think about for some of these businesses. Now, you can make money as an investor because of that, but it's not the most stable thing, especially when there's a lot of foreign currencies and they're all being devalued or debased relative to gold and silver. Everything in the Forex market is relative to each other. So it's like a pairs trade. If you've ever traded Forex, you know what I'm talking about. It's like, well, what's the dollar's value relative to the Japanese yen? Or what's the UK pound's value relative to the euro? So everything is relative to everything else. It looks like the dollar is going to be propped up, continue to be propped up by a lot of emerging markets, and also the G7, the other G7 countries like Japan and the UK and the other Euro countries. But everything is losing ground to gold and silver still. That is why gold and silver is higher, because of these Japanese type of policies. I mean, they're not the only one. So it looks like gold and silver are going to continue the run higher, and it looks like China is trying to slowly get out of the dollar. They're trying. I just heard Bloomberg say that this is the first year over year in 9 years that China's U.S. Treasury holdings are actually lower. So it looks like China is slowly trying to get out of the dollar. They might not be as trapped as you think, because they've already switched a lot of their long-term U.S. Treasury holdings to short-term, and that means they're almost out already. Okay? Hopefully this explanation did some good, so you understand a little bit about Forex, a little bit about what Japan is doing. This is very bad for Japanese savers, very good for the Japanese government and for large Japanese corporations. And I also think this is very good for the U.S. Treasury market in the short term. It's going to prop it up. So Japan's going to go in there and buy more. But ultimately, though, this is very, very bullish for gold and silver, because when that Treasury bubble, when the bond bubble does pop, oh my God, whew, it's going to be crazy. People, you're not going to be able to go to the normal old safe havens of the dollar, and U.S. Treasuries are probably not going to be safe anymore. Okay, I think that's it for today. I will talk to everyone later. Hope you have a great week, and I am out for now. Bye, everyone.